Hi everyone. Welcome back to Positioned.app. In our previous video, we explored the traditional interpretation of the Relative Strength Index, or RSI. Today, we're taking your RSI analysis to the next level with three powerful advanced applications: divergence, failure swings, and support and resistance trend lines. These methods provide deeper insights into market momentum, help identify potential trend reversals, and offer more nuanced entry and exit signals beyond basic RSI interpretation. As a quick refresher, RSI is a momentum oscillator that measures the speed and magnitude of price movements on a scale from 0 to 100. RSI compares the magnitude of recent gains to recent losses. The traditional interpretation tells us that RSI above 70 suggests an overbought condition. RSI below 30 suggests an oversold condition. But this conventional wisdom often leads to costly mistakes because it fails to account for market context. Beyond simple overbought and oversold conditions, RSI offers several advanced analytical applications: divergence, failure swings, and support and resistance trend lines. Let's begin with RSI divergence, one of the most powerful signals in technical analysis. RSI divergence is a powerful reversal signal that occurs when price and momentum move in opposite directions, indicating a weakening trend. There are two key types. First, bearish divergence. Price makes a higher high, while RSI makes a lower high, signaling potential decline. In our chart, from May to June, price climbed from 105 to 110, but RSI fell from 80 to 78. This momentum weakness preceded the sharp July-August reversal, a clear warning signal. Second, bullish divergence. Price makes a lower low, while RSI makes a higher low, suggesting potential upside. From September to October, price dropped from 90 to 85, yet RSI rose from 25 to 30. Despite falling prices, selling pressure was weakening. November's price recovery confirmed this bullish signal. This works because divergences reveal momentum behind price moves. When price reaches extremes, but momentum doesn't confirm, the trend is exhausting. Note how our divergences formed at market peaks and troughs, where they're most reliable. Let's apply this in practice. When bearish divergence appears, traders typically begin tightening stops and taking profits on existing longs while monitoring for short opportunities. Conversely, bullish divergence signals a shift toward long positioning or covering shorts. The key is confirming these signals with supporting price action, such as breaks above resistance or below support, before committing capital. Remember, stronger divergences with wider gaps between price and RSI tend to produce more reliable reversals. Mastering RSI divergence helps you anticipate reversals rather than react to them. Next, let's explore failure swings. Developed by RSI creator Wells Wilder, reveal momentum reversals before they appear in price action. These four-step patterns signal potential trend changes without requiring new price extremes, giving traders earlier entry signals. For bearish failure swing, the pattern unfolds systematically seen in the chart from February to May. RSI first surges above 70 in February, signaling overbought conditions. It then drops below 70 in March, confirming exhaustion. In April, RSI attempts to rally but fails to reclaim overbought territory, the critical sign that bullish momentum is fading. Finally, in May, RSI breaks below March's low, completing the pattern. The subsequent June to July price decline validates this bearish signal. For bullish failure swing, from August to November in the chart, the bullish pattern mirrors this structure. RSI drops below 30 in August, marking oversold conditions, then recovers above 30 in September. When RSI dips in October but holds above 30, failing to retest oversold levels, it signals weakening bearish pressure. November's break above September's high completes the pattern, preceding the price recovery we see on the chart. These work because failure swings capture trend exhaustion and early momentum shifts. Unlike simple overbought or oversold readings that can persist during strong trends, these patterns identify actual momentum transitions. Let's apply this in practice. Patience is essential. Wait for all four steps to complete. For bearish swings, consider short entries when RSI breaks its previous low, with stops above recent swing highs. For bullish swings, look for long entries when RSI breaks its previous high, with stops below recent swing lows. Enhance reliability by confirming with volume, moving averages, or key support and resistance levels. Mastering failure swings gives you a decisive timing advantage in catching reversals early. Our third advanced application involves drawing support and resistance trend lines directly on the RSI indicator. Drawing trend lines directly on the RSI indicator reveals momentum shifts before they become apparent in price, giving traders a critical timing advantage. Our chart spans January to November, with price candlesticks above and RSI below. Just as with price charts, RSI forms its own support and resistance trend lines, but here's the key insight. These RSI patterns typically emerge before corresponding price structures become visible. The red resistance trend line connects RSI peaks from January through June, sloping downward and revealing weakening momentum despite new price highs. Meanwhile, the green support trendline links RSI troughs from March through August, showing strengthening momentum on pullbacks. Early warning in action. In June, RSI breaks below its resistance trendline, our first critical signal. Price begins weakening shortly after, but notice the timing. The RSI breakdown preceded the obvious price deterioration. Then in August, RSI breaks its support trendline, confirming continued bearish momentum. Price continues declining as predicted. Now observe the price trendlines that form later. Price resistance connecting March and June highs only becomes apparent after multiple data points, yet RSI resistance provided signals much earlier in June. Similarly, price support linking May and September lows emerges late, while RSI support already warned us in August. This works because RSI measures the internal strength of moves, the momentum driving price action. When momentum shifts, RSI detects it before price structure fully confirms the change. Think of RSI as the engine diagnostics, while price is simply the speedometer reading. Let's apply this in practice. By identifying RSI trendline breaks early, traders can anticipate reversals before the majority of participants recognize them, securing more favorable entries and exits. The June RSI breakdown suggested reducing long exposure or considering shorts, while August's break confirmed maintaining bearish positioning. These trendlines act as leading indicators, consistently forming and breaking ahead of price patterns, providing a decisive edge in market timing. RSI is a powerful technical analysis tool when properly understood and applied. Remember these key takeaways. First, RSI measures the magnitude and velocity of price movements. Second, traditional overbought and oversold levels are guidelines, not absolute rules. Third, context matters. Market conditions affect RSI interpretation. Fourth, advanced applications like Divergence can provide valuable insights. And finally, RSI works best as part of a comprehensive analytical approach. The key is consistent practice and continuous learning. No single indicator is infallible, so always combine these RSI techniques with other technical analysis tools and sound risk management principles. Next time you're analyzing charts, take a moment to compare price action with RSI movements. Challenge yourself to identify these patterns in real time, and don't be discouraged by initial mistakes. Each chart you analyze is an opportunity to refine your understanding and improve your trading skills. Share your insights in the comments. If you found this helpful, like and subscribe for more trading education content. Also sign up for Positioned.app for real-time swing trading signals. Let's make smart trading decisions together. Thank you for watching. Until next time, happy trading!